All right, so welcome to the exchange. So, first and foremost, I'm not a financial advisor. I'm just here to give you my opinion on what I see in the stock markets. Looking to the left to see what has happened, then looking to the right to see what may happen. Do your own due diligence. Make sure you invest money in things you know about. If you don't know, invest in yourself and learn. That's the best way you can make money out here and have some security in these markets. So, let's look at what happens to stock markets so we can get a better idea and some security in exchange. Welcome to the Exchange Show.
All right, here we go. Let's talk about SPY. So everybody likes trading SPY. Why? Because it's got a lot of volume. It's got a lot of liquidity in it. So what's going on with it? If you can notice here, we're in consolidation. So let's go ahead and just mark that up. It makes it a lot easier to see, right? So our consolidation area is going to be from here to about there. Currently, that's where we're stuck at. Not going anywhere. This is not a bad thing. So if you notice, the strength of the market is going down, but it is also waiting to break this. This moving average, if it's broken, we're probably going to see a push up to most likely 50, 5,500. Oh, sorry, not 5,500, 550. My limit would probably be 552 at this point, but you may get a spike up to that. This has to be broken. If we can break that right there, we can break that last high on that bearish candle. That's where a lot of orders are waiting. We can break that, we'll be good to go. It's gonna be a free just elevator going up. You know what I'm saying? It's gonna be great. But what is it saying? Everybody got spooked on this. So the last time this bearish candle happened, it went through two moving averages. It went through the 9, went through the 14. All right, we got an automatic sell on that candle. This time, this is the difference. We got this bearish candle. Why? So this bearish candle, I want you to look at it. I want you to look exactly at that bottom of that bearish candle and the top of the last candle that created a gap. Did this fill that gap? Not yet. So we need to probably come down here to resistance, that 523. I'm thinking that if we come down to 523, down to here, that will fill this small gap that's right here. So we have a very small gap. And it's from here to there. It's a very small gap. Once that gets filled, I'm thinking that we're going to continue up. Now, once again, the only reason I'm doing this, or this is my train of thought, is because we're still in a buy. I'm still in a buy. I'm above my 50 or my 48-day moving average. I'm above my 100-day moving average. And I'm above my 200-day moving average. The trend is still strong. I got a bounce off of my 14-day. Okay, so I got a lot of things telling me to continue to be bullish on SPY. What I will look for is a better entry. Mainly, if I can get an entry, as long as it's below this 531, I would love for it to be down here around this area here, 525, for calls. Now, if I can get that, I'll be great. I'll be happy. Currently, it's at 529. So, bullish on SPY? Yes. Next level to look for? Well, break this right here, that 531. You break that 531, the next one's going to be 533. After 533, look for 537. So those are the areas I would look for if I was trading SPY, but that's only on a bullish sentiment. If I was bearish, of course, I would go for the next area of structure. Next area of structure is going to be down here around 521 after you break this 523. So if it breaks this 523, I would start getting bearish. And then I would look for 521. Going down again, I would look right here, 518. Then my next area would be the 48-day moving average or 50-day moving average. Currently around 516 to probably 518, that area. So that's what I got for SPY this week. Another one we're going to be talking about, of course, is Bitcoin. Everyone wants to know about Bitcoin. So let's talk about Bitcoin. And, oh, I don't even need that. There we go. So we're in a buy zone. Let's keep it simple. Up, I'm getting buys here, I'm getting buys here, and I got to bounce off my 9. So when I get a bounce off the 9-day moving average, it tells me that there's a very strong trend. If I got a strong trend, that's not bad. So if you got spooked off of these 3 candles, look at what these three candles actually represent. This is a good thing because you had a bullish candle that was then broken up by these three. You had orders grabbed down here by the last area that was structured by the last support here and here. So if you were looking and you were like, I'm not sure if it's going to continue, you would look for a reaction at this level at 67.017 and another one here down at 66.363. And what happened? These candles came and got those orders. Once they did, they stayed above the non-moving average, making it a strong trend. If it came down again and hit the 14-day moving average, I'm not going to lie, I like the 14-day bounce because it's a very strong, a lot of orders are always placed there. And since we are not moving the market, we're just following the computers essentially. They're doing most of the trading. You can't go wrong a lot of times looking for those as entries. Now, with that being said, where's the next area? Well, of course, it has to break our current place. So if it can break that 69,400 area, of course, you want to look for this next one, 71,425. That's the last one that needs to be broken. Why? Because then it's going to get 72,591. So here are some things you could do if you're looking for a bullish entry. If you're looking for bearish, you're like, I'm not sure, I don't know. Well, if you're looking for not a finish line, but a target price, an easy one, of course it's going to be here. And this is going to be 65,438. But I would just go for the 50-day moving average or the 48-day moving average, 64,884. Those are bearish. So if I was going bearish, I would look for those prices or strike prices. Or bullish, I would of course look up for the next area structure, the current one we're at, and then the next one, 71,396. Then after that, 72,619. So what we got next? Next one's going to be good old Tesla. So Tesla is looking weird, right? So turn this off. Currently, Tesla's tied up. It's tied up. The price action is compressed. So price action being compressed means one of two things. Either we're going to get a big move up or a big move down. Now with a big move up, what could we think? Okay, so if we're here, we at least want to go there to 187. After 187 is broken, we're looking where? 199, aka 200. Now, here's the thing. The only issue with that is you're leaving this open. And the way Tesla moves is not a bad thing. You may actually get a pop down to its earnings area, which was essentially right at the bottom of this gap. Okay, so down to the 148 area, 147 area. But that gap is going to get filled at some point. When, we don't know. So if you're looking and you're bearish, you're looking probably to fill this down to 148 and change, or at the least to 157. But this gap is going to get filled. At 155 zone or 155 price is a weekly support at this time. And right now it's holding this current support at 173. I would love to see it go up because I do have Tesla stock. I'm not gonna lie. I would love to see it go up. I'm just being honest. But this institutional candle wasn't broken up a lot at all. Okay, just a little bit, not even halfway down. So there's still probably orders here waiting, and they might be bearish orders. So just be wary of where Tesla goes. If it breaks the current area of support at 173.80, look for it to go down at least to the 155.15. You can definitely look for it to hit that 157 if it's going to go down. But there's orders in this area that are waiting to be hit. I'm currently in a sell zone, but this is looking to me like a pullback because the 100-day moving average is here. It hit it, pulled back, price is compressing. I'm still above the 48-day moving average, and it looks like I am above my 14. So I got a three-way green light to go for some calls. I already own the stock, so I'm just going to keep holding. So that's it for Tesla. Let's talk about Target. So if you haven't seen Target TGT, take a look at this. All right, so we had a bearish movement from that area. So it hit a big area of resistance and started breaking down, came back up, grab some more orders, continued breaking down. Where do you think it may go? Well, it already went past its earnings, so it made a gap. We're currently butting up against this gap. Now, if you notice, this was the last earnings. It went up, came down, went below it. We got support down here. So I've looked at Target a couple times, and to me, it looks like it probably wants to go back up. It's at the bottom here. Now, this is the thing. Just because you get this doesn't mean the price is going to go up immediately. It can go up and then come down and make a lower low. And then at that point, it could potentially go back up. So let's take this there. So if you're looking for it to go down further, I would look for around the 136 area. Now, currently sell zone. Very steep sell-off. Earnings happened here, and it went up on earnings, sold off before, but it went right to the 200-day moving average. So at this point, we have to do our earnings. And it's going to be all the way over to here. So you might be asking, why am I doing earnings? Earnings is a great price target. If you've never used this, it's a really good thing to use, because sometimes if you get really high highs throughout these time frames from earnings, if you notice, you have an M pattern and came down to meet earnings right here. So now we're below earnings, so you have time to see what pattern may form between earnings, and then you can take advantage of it. Currently, we're at the 200-day moving average and moving up. So for Target, do I see it going up? Not at this very moment, no. I'm looking at it to probably continue down again to at least 139 and then 136. And then at that point, it may gather enough strength to move up for Target. But currently, I'm in a sell zone for everything. So I'm bearish on Target. So that was it. Actually, I just want to look at one more thing. I've been looking at Starbucks over the last couple of weeks because it had a gap, which is now becoming filled slowly but surely. So now I got a green light here. Let's see if it's giving me everything else. I'm above the 14 and the 9, so I would look to meet the 48-day or the 50-day moving average, and that would line up with some support. So let's just do this right here, and we're going to call that support. Sorry, resistance. My apologies. Call that resistance there. So what my strike price would be if I wanted a cheap contract, I would look for $85 or $84. Currently it's at $78.87, and that's it for this week. So thanks for watching. If you liked it, give it a like, share it, talk about it, and we'll see you next week on the exchange.